Today we're going to talk about how to bounce back from trading failure. Stay tuned, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Today we're going to talk about how to bounce back from trading failure. This is an area that I think I can speak with a great deal of confidence on because I've had a lot of little failures and a lot of big failures in trading. If you followed me long enough, you know that I've blown up some small accounts. I struggled with trying to be profitable for 10 years, and one of the great questions, I was on Etienne Crete's Desire to Trade podcast last month, and one of the things that he asked me was why did it take you so long to get consistent? And I think part of the problem is as a retail Forex trader, one of the challenges we face is that we have unrealistic expectations of how fast we can do things. And I was really more focused on getting the system and the strategy down that would produce those large results for me. So I wasn't so much worried about making money every week. I was more concerned about building a system that was going to be tradable and profitable over the long term, that would allow me to have the holy grail of trading. And it's really important that traders who are really focused on mainly entry and exit strategies, they're looking for something that probably doesn't exist, and that's a high success trading system that lures people into creating and making a lot of trading mistakes. So they have some winning trades, they get overconfident, so they load the boat on the next trade, and that's the trade where it goes against them right away, and at this point then they engage in further errors where they might move their stop, they might not have put a stop into the market, they've already taken too much leverage on, and that market goes against them until it hits their point of maximum pain, and that's where it's done significant damage to their trading account. Again, I know that, I've done it, and those are the trades that destroy a lot of your capital, but it also damages your psychological capital. So how do you bounce back from that when you've had either a string of losers, or you're trading your system and you're losing, you're getting loss after loss, or you've engaged in some massive trading errors that have blown up a significant portion of your whole trading account? So let's go back to some simple basic things. Number one, figure out your trading style. So I talk about this with building your playbook, knowing the time frame that you're trading. You have to have an edge. I have stepped back with a lot of my trading, and even on my hourly system, I only look at a narrow window of time because I know that's consistently where my opportunities are going to lie, and I only look for one or two, maybe three really good trades a week over a basket of about 10 currency pairs, and mainly 4 or 5. And that's based on the volatility, it's based on the consistency of knowing that those markets move right on a regular basis. There are certain patterns that'll show up for me that when I see them, I'll look to be able to identify the time for me to enter that market, have a maximum amount at risk, and then also an asymmetrical risk-reward opportunity. I do the same thing on my end of day, but obviously those markets, I'm looking for probably 2 really good trades a month on each pair. So again, I don't try to hit every trade, but I'm looking for my major pattern setups over 20 pairs roughly for those, and I'm just looking for, again, maybe between 6 and 8 trades a month, but that can, I'd say on average that's worth 1,000 pips. So, do I always get those trades? No, and I'm trying to get better at identifying them when they're setting up, taking those trades. But that's my trading style. I really love the end of day on Asia closed, London open. I love the end of day. Looking for those certain patterns, and then there's the bread and butter trades that I talk about. There's Monday to Friday. I only look about 4 markets on the end of day for those trading setups. So it's really important that you identify what works for you based on your lifestyle, your comfort level with risk and volatility, all those sorts of things, your ability to be patient or disciplined in terms of, for end of day, it's not for everybody. Some people need action every day on the screen. I know that's where most of my trading mistakes took place, so I thought, well, there are certain things as a retail trader that you can do that will shift the odds a bit more in your favor. And one of the things for me was to trade less. How can I, as a retail trader, shift the odds more in my favor? End of day means virtually it nullifies the spread being a major factor. I know that the ranges that are tradable, there's an exponential range expansion opportunity. So if you look at the ATR of a market for the month, like pound New Zealand, pound yen, maybe 800 pips roughly. So there's an opportunity there for me to look for the right trade setups on those markets that might offer me a 400 or 500 pip trade, risking less than 100 pips. So that's a 5-to-1. I like those types of trades. Again, do I always get them? No, but those are the types of trades that I'm looking for. I know that that's what works for me. I know that that's what shifts the odds in my favor slightly. So identify your trading style. Number 2, have realistic expectations. That was probably the second factor in why I struggled for so long to become consistent. I wanted to make the big money fast, and I'm sure that a lot of you can relate to that. Now that can be done, but if you're wanting to achieve a lot of money fast, you got to be willing to take on that risk. And I wasn't quite good at managing. Again, I probably had a very high hit rate in terms of the successful, profitable trades, but I always blew up my account on 1 or 2 trades. So again, my expectations were unrealistic, and my ability to manage my exposure to the market on a less than ideal trade setup were the reasons that I would take those trades. I was overconfident, impatient, impulsive, and then of course I made other mistakes after I was in those trades. So it's really critical that you have a realistic expectation. One thing that I heard one trader say was, look at the best fund managers and what their returns are. So let's say 12, 14, maybe a really good fund did 18, 19%. Now I know there's ones that have done more, but let's say the best traders on those professionally traded funds average around 12% or 13%, somewhere in that range. Why are you trying to do 10% a week or 100% a month, or with a small account? It's great if you can do that, but the chances are at some point one of those trades is going to do significant damage to your trading account. Look at long-term capital management. They were professionally managed. They had an excellent track record, and ultimately they blew themselves up. Those were professionals. So have realistic expectations. If you're doing a couple of percent a month, it may not sound like a lot, but if you can do that consistently long-term, that's a fairly significant return. Peter Brand has had extraordinary returns. Over 40 years, he's averaged over 40% per year. That's incredible. There's always going to be people who are doing those types of returns. And ultimately, perhaps you'll be one of those. But in the beginning, have realistic expectations based on your ability, your skill level, your risk parameters, all the things that are going to hopefully ensure your long-term continued success in the markets. Number 3, do things better each week and then repeat them. So I talk about getting my 7-step daily routine from High Performance Traders. Go to my homepage. It's an audio file. You can listen to it anywhere, but it's about you setting up your daily habits and your daily routines. If you don't like the results that you're currently getting, it goes back to what you're doing on a daily basis and how you're approaching things. So if you want to change that, you need to change your daily habits, your daily routines, and make them congruent with the results that you're trying to achieve. Now that may not happen overnight, but as you unlock new learnings, you're going to continue to remodel that, reshape it, and get that more finite detail that's going to allow you to constantly improve. And if it's just one thing a week or a day that you focus on, get it right, get better at it, master it, and then repeat it, and then pick one other thing and work on that. So for me, I mentioned before, one of the best things I did was during the day, I'm not on the market except at certain times if I'm looking at the Asia Closed London Open, but I do a real quick check of the charts. I'm only looking for 1 or 2 patterns. If they're not there, I come back towards the 3rd hour of London trading. Again, those are the things that work for me. And I know if I was sitting on the chart, the market would want to lure me into taking a trade that was probably outside my trading system. It would look like a setup, but again, the market will often defy what can be some of the best classical chart setup patterns. So identify what works for you in terms of choosing one thing, get better at it, master it, and then repeat it and pick one other thing and keep working at it and getting better. Number 4, focus on constant progress. So this ties everything in together. So you've blown up your trading account, or you've had a string of losses, or you're struggling, you think you're never going to have a winning trade again. Go back to basics. Focus on constant progress. What did you do well today or yesterday? What did you do well? What could you improve upon? Where did you make a mistake? Or where was there less than optimal performance? How can we tweak that a little bit and get better? So maybe you need to change time frames, or perhaps you need to identify major levels, or take profits, or maybe you're getting in too soon. Maybe you need to have some criteria to prepare you better to be patient, more disciplined, whatever those things are. But focus on constant progress. Eliminate out the things that are causing you to make mistakes, whether it's in your mindset, in your technical approach, in your risk management process, but keep getting better. If you do that and you address these other factors, not only will you bounce back from failure, but you'll be approaching consistency and long-term success in the markets. When you get that consistency and long-term success, then you can obviously expand your account size, and at some point you may achieve those goals that you were trying to achieve initially with unrealistic expectations. So hopefully you got some value from today's video. Focus on constant progress, figure out your trading style, have realistic expectations, do one thing better every single week, master it, repeat it, pick one other thing, and keep getting better, traders. Hopefully you got some value out of today's video. Again, thanks for the feedback. Let me know what you're struggling with. Let's keep getting better together. This is a winnable game. Stay focused, stay disciplined, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.